When it comes to rules-based trading, there's about 5 different types of patterns I look at when I'm evaluating buy and sell signals on stocks, ETFs, even cryptos. Today, I want to discuss one of these that I haven't before and how to look at the strategy through the eyes of a rules-based trader. Hey, folks, Tom Gentile. Welcome back to the channel. Sometimes the worst time to buy a stock is when it's hyped up and everyone's got their eyeballs on it. Take Nvidia, for example. During Nvidia's last earnings announcement, everyone was paying attention. In fact, it was hard to find someone that didn't know what was going on with Nvidia. Many people bought the stock around the earnings announcement just a month ago. Have a look at the chart. You can see here that AI was in full gear. Everyone's looking at Nvidia's Q2 earnings report for 2023. The stock is going higher. And I mean, the report, good, was putting it mildly. 13.1 billion in revenue for the quarter. That was up 101% from a year ago. Earnings per share, $2.41. That was up 854% year over year and up over 200% just from the previous quarter. They absolutely killed it on all numbers and surprised even the most optimistic analysts. So naturally, $500 a share was inevitable. Mass media was all on this, practically promoting the stock. And why wouldn't people jump in it and buy it? Because everyone thought it was cheap. Many did. Check out the volume of the chart during the same time frame. Here you go. I mean, this goes back to around the end of July. And as you can see, the end of July, the volume, the low here was around 25 million shares. The high, you can see all the way to the far right. Here's the interesting thing. There's a purple line on this chart. This is the average volume looking back 30 days. Coming into August, it was around 40 million shares on average. We start seeing that number climbing. I mean, the first week of August, we topped 50 million. Mid-August, 60 million. Just before the earnings were released, 70 million. And right after earnings, when all the hype really just ensued, volume for the day after earnings went to over 110 million shares. That's the day that the stock jumped above $500 a share. So mass media did its job. It pushed the stock like it was going out of business and causing daily volume to be 2.5 times the 30-day average. So what typically follows is momentum. So what happened after the earnings report? Well, momentum started to the downside. And as you can see the chart, I mean, it did one more move up above 490, and then it was just all the way moving to the downside. The price retreated by nearly 20%. That's been in the last 30 days, okay? A good portion of that happened in just the last 2 weeks on the drop, part due to pullback in tech, part due to pullback in AI, and part from Nvidia themselves. You know, a chunk of their revenues are due to one relationship. And there's also some concern to some potential accounting irregularities. I don't want to say fraud, but that word's out there. I'm going to call it accounting irregularities and how they're booking sales. Now, I'm sure you're looking at the current prices in Nvidia and saying to yourselves, is Nvidia a buy right now since it's pulled back? Should I wait until it possibly goes lower? What do I do? Well, as a rules-based trader, I'm looking for objective signals that a bounce is really happening. And as a trader, I don't see that. But if you're looking at this as an investor and not a trader, let me offer you 3 things that are bullish about Nvidia at current prices: volume, technicals, and of course, the stock price. Let's talk about volume. This chart is a volume chart of Nvidia. Now, this is a different one than the one I just showed you. Since the earnings announcement, stock volume in the last 30 days has actually dropped with price. What that means is although price is pulling back, trading volume has as well. And this means that there's no panic volume here. Nvidia has actually returned to its average trading volume once again. Efficiency in transactional volume is a safety measure on its own. Now, let's take a look at another chart. This is a current chart in Nvidia, but a little bit different way. This is technicals. Now, if you take a look at this chart and you spread out the chart, you'll see the Q1 move pushed Nvidia up from $300 to where we are now. The lows are still getting higher and the highs are too. Also, notice the cone on the chart. And what I mean by that is that the highs are getting higher, the lows are getting higher, but it's coning out. This is an indication that this is a volatile stock. Duh, we know that. And the next cone looks to move higher. So also around the $300 share gap to the $500 high makes $400 a 50% retracement from earnings to earnings. That's also a good number to bounce on. Many other contrarian indicators are showing to confirm this. Now, finally, price. And you don't need a chart for this. Right now, the stock is trading about 15 to 20% off of last month. That's a huge discount from where it was, and a great idea to start putting your investment toes in the water if you like Nvidia. How much to invest? How to invest? Well, that's up to you to decide. But as far as how to invest, we're going to get into those topics next week. I'll see you then.